Where do you think that we top out, and what price do you think we top out at this cycle?
I think, well, 2025, my end of year target is 250,000
250
for Bitcoin. I think that we're going to get the maximum sort of bullishness on the amount of money to be created probably in 2026, 2027, especially because in the US, the Fed chair role is up in May 26th. And Trump, maybe they're not going to get a complete political lackey, but they're going to get somebody who is on board with printing the money and doing what they need to do to further accelerate this, make America great again. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas, while everyone's just like, oh my God, they're just like, they're going to do everything. Everything QE and supplemental leverage ratio and treasury buybacks and like yield curve control. It's all on because everybody's on side with Trump. And then we'll extrapolate a change that's too large, and then we correct.
Arthur Hayes claims that the banking system's impending collapse is intentional. Central banks are getting ready to do what they know best, print like there's no tomorrow, as the world economy falters under the weight of unmanageable debt. Bitcoin may reach $250,000 by 2025, not because it's a technological advance, but rather because fiat money is being given up to maintain the system. According to Hayes, we are on the verge of the endgame, in which Bitcoin is the only asset left standing when the conventional financial system collapses. The decision is straightforward: either use hard money to front-run the madness, or hold fiat and get destroyed. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Trump is just accelerating a trend that was already present. He started a trade war in 2018. Biden continued it. He has intensified it. He's backed up a bit, but if you've looked at how Trump does negotiations, he starts with a maximalist position, he walks it back, he looks more conciliatory, then he comes back again at you with more maximum pressure to sort of get the best deal that he can given the set of facts. And so I think that's going to happen again. And so we're going to see some more volatility in the financial markets. But the best thing that we have figured out is that 140 on the move index elicits an immediate policy response. So you don't have to worry about it.
Say that again?
140 on the move bond volatility index elicits an immediate policy response.
Okay.
The day that move hit 140, went to 172 intraday, Jamie Dimon gets on CNBC and talks about how bad tariffs are and how the bond market is having issues. Trump immediately does the 90-day pause. And Besson gets on TV talking about treasury buybacks, and the Fed, Susan Collins, says they're ready to do whatever it takes. So the market, the American empire cannot handle volatility, nor can any other country around the world. Bitcoin thrives in that situation, so we don't need to be worried. In 2022, in the third quarter, everyone was super bearish on crypto and other risk assets. Why? Interest rates are rising, the bond market was collapsing, stock market's going down, FTX is imploding, nobody wanted to own crypto, Bitcoin hits 15,000, people think it's going to 10,000, that kind of stuff, right? And then out of the blue, Janet Yellen comes back with, not QE, this activist treasury issuance, issuing more bills and bonds, taking $2.5 trillion that are sterilized on the Fed's balance sheet and moving that into the global markets. And we saw risk assets from December of 2022 till early 2025 pump. Bitcoin up 6x, stocks doubled, gold doubles, everything is great. But the Fed has not really been that accommodative over that period of time. He just stood by, Powell sat in his cuck chair and got fucked by Yellen, right? And that is the set we have today. It's a little bit different. So we have Besson in charge. We have another issue with tariffs, right? Bond markets melting down, stocks cratering. Oh no, inflation is going to rise because China's not going to provide cheap goods. I'm very uncertain. I don't need to own Bitcoin. I don't need to own these other assets. But what happened? The authorities saw that volatility was increasing, and Besson gets on TV and talks about treasury buybacks. Which is essentially a way for them to relieve pressure on balance sheet constraints, which allow the banks to lend more money to hedge funds to buy treasuries at auctions in this thing called a basis trade. And so I think that is going to be the bottom moment of this particular cycle, when Besson got on Bloomberg and gave that interview saying he's got buybacks and he's going to make sure that the treasury market is well supported. That was a signal to go long everything. These hedge funds, they own bonds. They have a trade where they buy a bond, they sell a derivative futures contract. And they take that bond to the bank and they say, hey bank, I don't have any money to buy the bond, can you give me the money? And they say, okay, yeah, sure, I'll look at the bond, it's a treasury bond, very liquid collateral. Here's some money, I want you to put a certain percentage of equity against that. Now, they need a lot of leverage to make this trade work from a profit standpoint. And so the less equity the bank requires, the more leverage they get, the more they do the trade.
Yeah.
And these hedge funds show up at the auctions and they say, I don't care what this bond is priced at because I'm just trying to trade this differential between a bond and a derivative. So yeah, the US balance sheet is fucked because it's $36 trillion and all these sort of issues, but hey, I'm gonna make 10 basis points, lever it up 100 times. I'm sweet, I don't care what the price of the bond is.
This is kind of like the same basis trade that we saw when the ETFs first launched, and then when it.
Well, this is in the bond market. It has nothing to do with crypto.
Right. Okay. So, but also, you don't think they're going to go buy Bitcoin ETFs to
this is
that basis trade?
No, this is all about how do we get dollars into the system?
Right? Yeah.
So these hedge funds, they show up and they buy the treasury debt that Besson is issuing. Now the issue is that as a bond matures, it becomes less and less liquid as it moves further away from the benchmark tenor. So what can Besson do? Well, he can do a budget neutral, supply neutral thing where he issues a new bond, he buys back the old bond. So now the old bond trades a bit expensive.
Right.
The spread narrows between the old bond and the futures contract. The hedge fund makes a profit. Now their books are relieved of the old bonds that required a higher equity capital charge. They get these new bonds that they can get more leverage on. They made a profit, and now they can do this trade even more. Mm-hmm. And so Besson is essentially clearing the bank's balance sheet so they can lend more money to these hedge funds who can show up at the auction and buy the debt at a very expensive price and buy a lot of it.
In times of financial chaos, Bitcoin thrives. Politicians may behave as though everything is under control, but their desperation, debt, and fear reveal otherwise. It is not only possible but inevitable that the current monetary system will collapse. Additionally, Bitcoin will be among the last assets surviving when the house of cards eventually collapses. America's debt is overwhelming it. The deficit increased by $7 trillion under Biden, and Trump is expected to surpass him in spending. The only alternative left is to print more money because of the aging population, the skyrocketing military expenses, and the lack of a plan to address the debt spiral. And Bitcoin might be the biggest winner, just like in 2022. History might be repeating itself as geopolitical tensions rise and another liquidity storm develops. In the upcoming altcoin wave, Ethereum, which is frequently disregarded, may make a strong comeback. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
But that's why Bitcoin's great, because we don't care.
Yeah.
We know you're going to print more money. We know that Bitcoin does best when money is printed. I can't tell you what stock's going to do well. Like, that's hard.
No.
But I can tell you Bitcoin's going to go.
Yeah. So in your speech, you said, I think Bitcoin to $1 million.
Correct.
In 2028.
Correct.
So what leads us to that?
So Biden issued about $7.1 trillion of debt, net to treasury issuance over his term, right? And we got Bitcoin 6x, right? Trump is already tracking 22% higher in the first few months of his tenure.
And again, is that spending?
This is
higher
net,
deficit.
This is net treasury issuance.
Okay.
That's the deficit. The deficit is cumulatively $7.1 trillion deficit. The deficit's already expanding under Trump, and he's supposedly doing Doge. Mm-hmm. Yeah, they're cutting stuff. It's a drop in the bucket.
No. What do you think about ETH right now?
I think it's the most hated layer one, and so on balance, it should do better.
Yeah, exactly. Yeah.
It's most secure, proof of stake, largest number of developers, large amount of value secure, all those sorts of things, right? Obviously, we were trading the rate of change and the expectation. That's why Solana went from 7 to 300, right? The rate of change of adoption of meme coins and transaction volume was really rapid. Therefore, the price went really, really high. But even at its peak at 300, it still didn't eclipse ETH in terms of total market cap, right? But again, we're not trading total market cap, we're trading the price.
Yeah.
So I think that Solana, yes, will it go up? Absolutely. Could ETH outperform Solana if we get this sort of money printing bonanza and people shift out of Bitcoin into more altcoins? Yes, and especially if ETH starts to show some life, the price creates the narrative.
Yes,
then all these things that we love,
ETH is great again.
Yeah, exactly. Oh, it's got the most developers. That's why I'm buying ETH. Personally, I think Bitcoin dominance is going back to where it was before sort of the 2021 altcoin season, which is like 70%.
Yeah.
That sort of, and then people start rotating, right? Oh, it's back above all-time highs. Oh, the bull market's back. Okay, well, altcoins should outperform. See if that the shit is a key word there.
Yeah.
Depends on what you buy.
Yeah.
And that'll give back the animal spirits for people to start going back in the ecosystem.
Yeah.
Like, okay, the bull market's confirmed. We went from 70 to 110, down to 70, back above 110, maybe at 150 or 200 or some level, like on rising volume, very good looking technical chart. Okay, now it's time to go into the shitter and try to find some gems.
Where do you think that we top out, and what price do you think we top out at this cycle?
I think, 2025, my end of year target is 250,000.
250
for Bitcoin. I think that we're going to get the maximum sort of bullishness on the amount of money to be created probably in 2026, 2027, especially because in the US, the Fed chair role is up.
Yeah.
In May 26th, and Trump, maybe they're not going to get a complete political lackey, but they're going to get somebody who is on board with printing the money and doing what they need to do to further accelerate this, make America great again. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas, while everyone's just like,
Pumping.
oh my God, they're just like, they're going to do everything. Everything QE and supplemental leverage ratio and Trivy buybacks and like yield curve control. It's all on because everybody's on side with Trump. And then we'll extrapolate a change that's too large, and then we correct.
What does this represent for Bitcoin, therefore, and where does it lead us? Arthur Hayes contends that the route to $1 million Bitcoin is not merely an empty fantasy, but rather a sensible reaction to the current state of the economy. Regardless of who is in charge, government deficits are skyrocketing. Whether it's Biden's $7 trillion deficit or Trump's indications that he is already outspending, America's spending machine is just getting faster. According to Hayes, this makes the ideal conditions for Bitcoin to flourish. Bitcoin stands out as the best hedge as confidence in conventional systems declines and the dollar depreciates due to incessant money creation. And now that ETFs are in place and institutions are starting to pay attention, Bitcoin is beginning to take on the appearance of digital gold rather than just being a risky tech asset, a store of value in a world that is unstable. But Bitcoin isn't the only issue. According to Hayes, if the bull market picks up steam, people might start shifting their investments to Ethereum and other cryptocurrencies as the money printing argument becomes more compelling. Ultimately, he isn't claiming that governments will purchase Bitcoin directly just yet. They don't receive any votes for that. However, they will continue to spend, stimulate, and print. And Bitcoin, Ethereum, and cryptocurrency in general may be among the biggest beneficiaries as that money floods the system. Although the financial system may not fall apart right away, it is rapidly evolving. And if Hayes is correct, the largest change in the way we store value is already taking place. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.